Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Kooima Varilek. We had higher closes on Friday with the exception of the hog market. And let's talk about cattle first because we had cattle on feed that came out at 2 o'clock this afternoon. And if you just look at the numbers, cattle on feed at 98%, the placement number 95, marketing's at 94. Scott, that was pretty much what was expected, wasn't it?
Yes, it was, and thanks for having me. So we're in line with the estimates that we can kind of put that to bed a little bit. But every month that we have these cattle on feed reports, it's just that I think general reminder of how tight we are. The on feed numbers less, the placements less, the marketing's less. I mean, we are just that tight on numbers. And when I look at that marketing number, usually a marketing number that low, down to the mid 90s, that can maybe spook you a little bit. But I think that's just still telling me that the cattle are not there. And we're kind of seeing that in how the Packers are acting. So I think we can kind of take the cattle on feed report, just put it behind us. We'll move on to the next one. It verifies what we feel like we know in the tight supply numbers. I guess in the weight breakdown, the only thing I could really pick from it, across the board, less numbers each one. Maybe that 800 weight kind of calf was maybe a little bit even lighter yet than what it was a year ago. So if you're looking for, spreading apart, looking for a needle in a haystack, maybe that's it. So maybe the February board maybe could look at something like that and say, okay, less 800 pounders there. Maybe it affects it that way. I would generally say no. We're just kind of tighter across the board in all the numbers there.
Yeah, we're just going to keep getting tighter, aren't we?
I think that's going to be the case. I mean, we still haven't reached, to me, this part of the market where we're going to say these heifers need to get back into the cow herd because we need to get to expanding. I don't know. Part of me is still telling me we're not in that euphoric state yet. I know people think I'm a little bit crazy there yet, but with the interest rates staying higher and going to stay higher out into the future, there's got to be some serious incentive and some serious confidence that this market can stay at a high level. If you're looking to expand in the beef industry, it's going to take a large dollar amount that you're going to have to foot up and a lot of risk. And it's not something like you can just grab some cows, have some calves and sell them real quick. It's that getting a heifer bought, getting her bred, and another year have a calf, and then wean off the calf in another 6 months. You're so far down the road before that can actually happen. So I feel like we're not here yet at the highs where we're going to be, and that there's still some room left. If we get to that point where I do see the expansion really starting to pick up and we feel like, we earned these prices, we're going to stay here at all the time, that kind of confidence, I don't see it yet.
Okay.
Maybe some are, but I would say not yet. So still waiting for that heifer retention, and that's going to pull that many more head out of the feed yards when it does happen.
Well, let me talk about the technicals. We made all-time highs in live and feeder cattle futures early in the week. Then we saw key reversals, and we had lower weekly closes. But we've negated those before. So you're saying this is not topping action.
That's how I feel. I feel like we're still okay. You get the Thursday sell-off with all the outside markets, the macros kicking in, and commodity-wide selling. Everything's down. So you turn into a Friday. Which markets are gonna rally and fight that back off and go back to what they're trading? Cattle were the one. Soy oil was the other one that I had kind of noted that did have a pretty good rally standing on some decent news. So I think the cattle can fight these off. We're at record highs. So every time we have a little bit of a break, have these severe corrections, there's a lot of people calling for the tops and saying we're in at tops in. But to me, we fought back. It was very resilient today, the way it gets some triple digit gains and just slowly, steadily climb. And then we had a good cash market on top of that this week, even with the lower trade.
Yeah, talk about that steady to start with. But even today, here on Friday, you heard of some higher money.
Yeah, we had the lower trade all week. So I think the expectations were, okay, I guess the Packers are going to pull the bids down and we're going to have to get hit by that a little bit. But we did achieve $1 higher cash this week, some 187 in the north. I got $1 higher in western Nebraska. They were able to get up to 185. And then even in Texas, heard some 184 today, which is stronger than the 183 we have heard the few days before. So that's a great sign that we can hold this cash together. Those prices are still there. You hear a little bit of mixed emotions. It's hard to try to dive in on which packers need cattle. I think there's a few living close to the knife and a few that maybe have some more inventory around them. But the one thing I do note is we have cattle moving from state to state and around jockeying. And I think that's just because the numbers are so tight. When you have cattle going from South Dakota to Kansas, you got them going from Iowa to Pennsylvania. Somebody told me Texas to Arizona. Don't ask me if that really matters. I'm not going to be that familiar, but we do have cattle moving around trying to fill these holes on tight numbers that we have.
And it's certainly borne out when you look at the slaughter figure for the week, only 625,000. That's very tight.
Yeah, we had quite a drop in the slaughter this week. And I think we've been told that by packers. They're going to start slowing hours.
Yeah.
We're really going
is
to
that
cut
kill
hours.
cuts, or is that just the numbers aren't there?
I think it's both. I think that the numbers aren't there. If the packer went out and tried to bid a higher price and say, hey, well, I really need some cattle, I'll go 190. I don't think you're going to stumble on a bunch more numbers and have a bunch more available. So they're just electing to say, okay, we're $1 higher, get what we can. We're going to have to do some kill cuts on the back because the numbers aren't there. So I'm not looking at these kill cuts. And yes, that's usually something that's going to give the packer leverage. Yep, we're seeing some of the carcass weights grow. Well, those weights are going to have to be there if we're going to have enough beef to kind of fill the demand that we want in this market. So it might be their way to try to get some beef, some weight back on these cattle, to have some more weight to slaughter. And it's also the incentive is there to do it. You've got cheaper feed. For sure. You've got excellent growing weather right now, and the feeder calf prices are that much higher that you have to replace them with. I might just choose to put some more weight on what I have rather than trying to replace right now.
Hog market down today, but let's talk about the big chart breakout on Wednesday, no follow through on Thursday or Friday, and a lower weekly close. So is that market rolling over?
Good question. Hogs doing what they do. Keep you guessing. If you're a bull or you're a bear, you're happy and sad at some point in the week. That's just what they've been giving us. So you're still trying to digest the breakout on Wednesday and think, okay, these hogs breaking out of the top side of this range here, and you got them up to 78, starting to look at $80 on a market where we said, okay, there's quite a bit of supply there. We never really had the feeling that Dees probably needed to be the leader to break out. And then the next 2 days, triple digits down 2 days in a row, and with a limit down on Thursday. So keeping us guessing for sure. I think the only thing you can do is look out to the long term and say, yep, got some supply now. Through the fourth quarter, we've had some increased sow slaughter. So possibly next summer's look a little bit better, maybe even in the spring, some tighter numbers yet. So just kind of always going to fall back on that long-term supply feel and try not to outguess these intraday swings because they're awfully hard to try to guess.
Yeah, it's been pretty volatile. Corn market up today, but we hit new contract lows early in the week. We did close a penny higher, but do you think we'll retest the new contract lows that we made here during harvest? I mean, you would almost think that there's a good chance of it. It's pretty hard to hold that up, isn't it?
Yes, the opposite of the hog market. We just talked about the volatility, and the corn's laying here pretty flat. So it doesn't look like it wants to run away from any of these lows real fast. And I don't know that it has the story behind it to try to do so. I mean, the lacking of good demand, and we've got, what I'm going to say, yes, we got variable yields all across the country. We always will and always have. So it's kind of, you almost take your stance a little bit, what you think the general feel is. And I'm going to say we've got some better expected yields coming at us from some of these farmers here, and genetics that are doing a lot better than they used to. So we're going to have a much larger ending stock number than what we had a year ago. And we need to decide, are we going to get some demand that's really going to kick in? Yes, low prices cure low prices, but not sure if we're quite low enough yet. So we're going to keep testing these lows. But the other side, you talk to some of these, extreme bears in this market, and they say downside of 450. I keep hearing this 450 number. Well, we're sitting here at 475. We're not that far away from 450. And the bulls would say more of a number like 525. So whatever side of the market you're on, I don't think there's big expectations of a breakout move either way. And that's why we've been absolutely steady on this market.
Soybeans had a down week by 44 cents on the November contract, and we took out the $13 mark, closed below it. Do you think there's more downside risk?
finding ourselves a little bit oversold. I tested out the $13 number on the November soybeans, probably stopped a few guys out, got a little bit nervous, but I feel like it can get a little bit of recovery just because it's oversold. But I don't know that's going to be a long sustained. I think you can throw that in the bucket with the weaker demand talk. And now we have to start talking about South American acres and what that large number is going to look like. How big is it going to be? So I think it's going to be a tough year for us, tough time of year to try to rally these beans right now. We still have a lot of bean harvest to be done. Hearing some pretty decent yields. I'm really impressed with how these soybeans handled the end of July and into August and what we can still yield on those beans. So very impressed with that. With some of these high interest rates and operating notes, I could see those beans being the grain that you want to sell as a farmer, and you're going to cash some of that in, and you'd rather store your corn. So I think that could be the case. Harvest pressure might not quite be done here yet, and I think that can push us a little bit lower yet into the mid 12s. Eventually, I could see a little just short covering bounce here just because we're so oversold, but I don't think it's out of the woods yet.
Yeah, that's what I'm hearing too. Sell beans off the combine, store the corn. All right,
and
thanks for joining us.
Normal. So
yeah. Thanks for joining us. Have a great weekend. Scott Varilek with Kooima Kooima Varilek. That's worth it.